Okay guys, hello and welcome to part 7 of the LocationPoint Academy. So we are today talking about the wipeout signal. I just waited a few minutes because I read in the chat that Georg is having some troubles getting into the group. So I will just start slowly and I hope Georg will be then able to join us in a second. Let's just start with the sound check as each time. If you would be that nice and just give me a short feedback if you can hear me. I already streaming my screen, so please just a short feedback. And also Georg did not write yet, but let's see if he can make it in the group. Okay, I got the first feedback that it's okay, that that you can hear me. Then I will start with today's session. Thanks for joining me again for LocationPoint Academy. We are already in part 7, so we are nearly at the half of the complete academy. A few slides at the beginning as every time. You can ask your questions in German or English. The webinar is recorded and published to the LocationPoint protected group. So Georg, I just saw. Okay, Georg is here. Hello Georg. Nice that you found us here. Okay, so you just missed the first introduction slide, so you're ready to go. So in the LocationPoint protected group, I posted each of the webinars I held with you last week. So up to part 6, everything is online. For this part, I can already say, as tomorrow is holiday, probably this video, the recording of this video, will only go online by the beginning of next week. Okay, social media profiles, you know, we are on Twitter and Facebook. You can join the groups. I think you are already all in those groups. This is interesting. We are nearly done with the left row of all the topics. That means that by today we did then half of all the videos and all the education sessions. And what we also will achieve when we end today is that we talked about each LocationPoint signal in detail. That means today we talk about the wipeout signal. This is one of the, let's say, it's called the hardcore entry from LocationPoint perspective. It's not a classic LocationPoint signal, and it's also the signal which Gilbert taught me as last. So it was the last signal he taught me. And also I can already say wipeouts are, I do not trade them very often because they are really let's say the hardcore entry. They can be very profitable, but you have to know again, of course, what you do. So they do not follow the logic we had the last weeks. This is also why Gilbert taught it to me at the end, and it's also why I am listed it here at the end of all signals, because until now the 8 train, the 20 train, stairway and the yo-yo signals all followed, let's say, the same rule of having a retracement at the location point. The wipeout is the first one which does not follow this logic. It's basically an easier logic, but it's quite hard to spot when you do not have any software which will detect those situations in the market for you. So as I said, today the last time we will talk about a LocationPoint signal in detail. The next week we get into multi-time framing, and where we will analyze a lot of markets, and then also very interesting topics like initial stop and lane changes, break-even stops, and also the workflows are coming up in the next weeks. So who we are, you know, Gilbert is the founder of LocationPoint Trading Style, and I'm the LocationPoint trader who is trained by Gilbert. This is why I'm this was so fast. This is why I'm holding this webinar here with you to teach you how to trade location points. Okay. The disclaimer again. You know, each transaction, all trading is associated with significant risk. All what I'm telling you here is no investment advice. You are on your own risk in the market, so please just take this disclaimer and read it, and then we're ready to go. And what we have here is already the recap of the last session. So I have, I think, 3 slides as recap. then I will tell you and teach you the theoretical background of the wipeout signal, and then of course also as the last weeks we will just look at some charts in Agena. Okay, so what did we learn last week? We had the yo-yo 200 signal, which is as we learned quite similar to the yo-yo 130 signal. Yo-yo 200 means it's a counter-trend signal and it detects market reversals. What we need for this is a climactic situation. So we need, for example, a climactic short situation. So this means that the market is very far away below the SMA 20, and this would be a situation where we are looking for a long signal. Also, this is an AND or OR connection here, so we either need a climactic situation or a strong movement before the signal. So when we have also strong movement, most often a strong movement means that we are anyway in a climactic situation, but basically it would also mean that it's enough that we only have a strong movement which will stop exactly at the SMA 200. When we then get a retracement, so you know it's basic location point logic, when we get a retracement, a single bar retracement, double bar retracement or triple bar retracement at the SMA 200, then we have an yo-yo 200 signal. Okay, so then we had two more soft rules. Soft rules, as a reminder again, this means that they are not mandatory. So what this means is if they occur, it's good for our signal, but also we can have signals without those soft rules. This means for if the SMA 200 is rising, this is good for our long signal. And if it's falling, falling SMA 200 is good for a short signal. Okay, so what I did then, I showed you here how this will look in the charts then. So the orange line is the SMA 200, it's falling here. We have the black line, which is the actual market. We then have in blue the single bar retracement, which exactly stops this strong movement exactly at the SMA 200. We have a nice single bar retracement here, and we get the yo-yo 200 signal, and what we expect or what we want the market to then is to reverse, and this is also, you know, you see here this counter trend action which we are speculating on when we trade the yo-yo 200. Okay, and the last slide here, what I drew here for you is the entry is again at the low here for a short signal. The entry is at the low of the signal candle. And what was important, what is very, very important, what we learned for the stairway and also for the yo-yos, when you trade counter trend signals, we recommend that you do not place your initial stop exactly at the high of the signal candle. So I'm talking again about a short signal, but we recommend that you give the initial stop some place, so we say about 1/3 of the candle size is where you can place your stop, because what is happening often, many times it won't be that smooth, that the trend is completely reversing in one candle and then going into your direction. What most often will happen is that the market is going into some sideways phase after the signal, and to avoid to be stopped out and here with some spikes, we recommend that you have some deviation here and do not place your stop exactly at the high here, for example, or the low for a long signal. This was basically it here from the recap of last session. Let's get my Agena here. Okay, so before we check this first wipeout signal we see already here in the market, of course we will draw some pictures. So this is not what we need here. Okay, so we talk today about, so of course I have my whiteboard here again. Okay, go away, come on. Okay, so we talk today about the wipeout. So you will understand also in a second when we see the signal also in Agena why it's called wipeout. And I told you it's not exactly the location point logic we had the last weeks or which is used in the other signals. What the wipeout is doing, basically what it is, and also what was the first thing Gilbert told me about this signal, is it's the hardcore entry. Okay, so for those of you who are not thrilled enough with usual location point trading with the signals we learned until now, this is now basically what you can do. This is the hardcore entry, where you get in with extremely high position sizes. Most often your stop is extremely tight, even tighter than, I mean, location point trading always has tight stops, but in the WipeOut it's most often even tighter. And you really, what you want to do is in a strong, so basically what we need, the first thing we need is 2 to 3 solid bars. Okay, this was not solid bars before the signal. Okay, so and those solid bars need to be in signal direction. Okay, that means, for example, when we look for a long signal, we need 2 to 3 green solid bars. If you can remember, solid bars are quite strong bars, so they are not very small, but they are not the biggest bars in the chart, but they have some, let's say, healthy bar size, and also they do not have the close is very near at the top and the open is very near at the low, so the high and low is not very far away from the candle body. So we need 2 to 3 of those before a long signal, so green ones before a long signal. That means we need a strong movement before the signal can occur, because what we want to do with the WipeOut is, in a strong movement we want to get into this strong movement with a very high position size, and this is how we can achieve this high position sizes. Our signal bar will be, so I mean after these 2 to 3 solid bars, we need 1 to 2 narrow bars. And those narrow bars are after the strong movement. I have some great examples in Agena, so you will, of course, again, will understand what I'm talking about here in a second in Agena. Also, if you can remember, I mean, of course, it's a few weeks ago, a narrow bar, this means it's smaller than 0.5 ATRs. So I'm talking about the candle size. A narrow bar is a very small bar. I will draw you a picture then how this will look. But so basically the basic setup is, we have, for a long setup, we have 2 to 3 solid bars in the long direction, so 2 to 3 green solid bars. So we have a great long movement, and after this movement we have 1 to 2 narrow bars. Best case is that they are red candles, so we have this stopping action. And what this stopping action basically from the market psychology means, we have some great gains, and those great gains are stopped immediately or suddenly, and this means the market participants somehow are, let's say, even disappointed, many of them, because they saw these great gains. Now they jumped in and now the market this movement stopped. After this little, let's say, break the market took, this strong movement again continues. And in this continuation, we want to be part of this continuation from the strong movement. And this is what often happens. So we have this, let's say, this small break the market takes to breathe, for example. Yeah, when you want to see it like this, the market breathes, like a very small correction in the market, very small, and these small bars are often with high volume, because in these small bars a lot of transactions are happening, a lot of owners and sellers of the so a lot of owners will sell it, and yeah, you know, a lot of transactions will occur in this small bar, and they will add and subtract each other, so at the end the price is not moving very far. And this is what this 1 to 2 small narrow bars basically are doing. We have one more rule we have to take care of. We should not touch the SMA 8. So you have to imagine now this wipeout signal. The SMA 8 until now was when we wanted to follow a very strong and even fast trend move. The wipeout is even faster than the SMA 8, even faster than the 8th train. This means when the market is moving far away, or yeah, if it moves far away from the SMA 8, so this means there is very strong movement, and that quick and that fast movement that even the SMA 8 is lagging behind. If this occurs, this is what this is a strong movement we want to see. So in the long, so for okay, let's continue here. For a long setup, we need to be above the SMA 8. So this is for long. And of course for a short we need to be below the SMA 8. And above and below do not even not only mean just being above, it means being far above, and do not touch the SMA 8. Okay? And if we have this now, we are basically ready to go. One more thing about the entry. Let's just do this on the next slide. I will delete this here. So I just want to draw you how this for example can look like. Let's see if I can get this. So for example, I know the market is coming somewhere from here. Then we have let me practice my drawing skills here a little bit. Okay, not that bad. So these are green candles. So what we have here is this strong movement in the up direction we want to see. So after this great movement, what we now have is this. And this is a red candle. So this is the narrow bar we are looking at. It's very small, and it's after those 3 solid bars. So what now happens is we will get a wipeout signal also from the LocationPoint package here. Okay? What we do now, how do we trade this? Oh, I hate this blue all the time. How we trade this is we have an entry order exactly at the high already here from the narrow bar. And what you now can do is basically there are 2 solutions. You can place your initial stop, the first hard stop, at the low of this candle here, but then again you will have not the greatest not a too small a too high position size. You can go and even put it, for example, at the low of this candle, or you go there, let's say, so this is the very hardcore entry. If you do it like here, if you have your initial stop here, you can also, I mean, you can of course put it a little bit below if you're not that hardcore. But basically, if you really want to do a hardcore entry, you really put your entry at the high of the initial of the narrow bar and the initial stop on the low. And what we now want to see, what should happen is, okay, I can't do it. Now let's take, I don't know, too many colors. what we now want to see is, of course, that the market is breaking up here and boosting up to higher prices and continuing this great move which was already here, which was performing already here. Okay, this was basically it from how to set your entry. Okay, I will write this here. So the entry is at the high for a long signal or low for a short signal of the signal bar. And this is the narrow bar. Two more things already now. This is also what we will talk about in the stop placement sections in a few weeks. But I have to tell you this already here. So what we will do here, we have the hard stop, because this also it's quite quite different to all the other location point signals. This is why I have to tell you this here already, if you just that you're aware of this. Oh, this is when you talk and write in the same moment. Soft stop. So we know we had, for example, for the 8 train, for the 20 train, we have some trailing at the SMA 8 or SMA 20. We have for the stairways some pivot fast and trailing at the first time, and then we do some lane changes to the SMA 20 and SMA 8 if the market is moving in our direction. What we have for the wipeout, the problem we have, because what I also missed here is that I drew the SMA 8, for example, here, because this will be somehow here. This is the SMA 8. So this is also what I meant. No, basically this was not nice. It should be a little bit like this, that, for example, so like this. So to have more distance here. Okay, so that we're really moving even faster than the SMA 8. And here with the signal candle we are quite far away. Okay, so we cannot use the SMA 8 as trailing stop. This because and the SMA 8 is the fastest location point we have. So we have to use something different, because otherwise we will have some stop which is too far away. So for the wipeout we use the good old bar by bar stop with a little bit different settings for soft and hard stop. For hard stop we use bar by bar. And we go 2 bars back. Also for the soft stop we use bar by bar. Here we only go 1 bar back. Okay, so 1 bar back means always at the previous bar. This is the classic bar by bar stop, but to don't get stopped out too quickly, because if you have a hard stop bar by bar, this is very tight stop. So for the hard stop we say we go 2 bars back, and for the soft stop we say we go 1 bar back. The soft stop is to keep us a little bit long in the trade. And yes, basically I think now I told you everything about the wipeout signal. That means I have to stop with my whiteboard. I like drawing here, so okay, I have to stop here, and we will go into Agena. Okay, so I have pre-selected some charts here where we can see very nicely how nice a wipeout will look like, and I can just show you this, what's going on here. And this is the first. Okay, you see my Agena? Yes. The first nearly the same as I drew you in my picture before. So we have the first candle, the second and the third of very high and very strong up candles. Then we have here this small narrow bar, And what we can do here, what we will do here is we have here our entry. I can do some normal trend lines here. Here we have the entry, and now what I told you is, if you're that hardcore, you can place your initial stop even here. And in this case, probably would have even worked out. I would say, I mean, if I trade this, I give it a little bit of space. You don't have to go down here because this would be too far. But let's say in the middle of the previous candle is what I like to do. You can even put it here. You won't be stopped out here, and you will have bought a few more stocks than I already even. Okay, but so what happens here? So we have the entry here. On the next candle, it is not triggered, but it's still a small narrow bar. So what we do not want to see at the next bar is, let's say, for example, a big candle down to the SMA 8 here, for example, because then this setup wouldn't work anymore. If the next candle, if they are very small, we can say, okay, we leave the order in the market, and this is fine. So at the second bar, we are triggered into the market. And you see exactly what's happening then. This is exactly what wipeouts are here for, or why they exist, why Gilbert created this signal, because he could see this happening in the markets. So we do not see any location point line which is giving us this signal basically. What we see is that we are far away from the SMA 8, okay, but this is important. We do not touch the SMA 8 since a few bars. We are triggered into the market, and up from here, for example here, this candle here, just to tell you once where would our stops now be. Our hard stop, or our soft stop, will be bar by bar. So this will mean at the close of this candle, the soft stop will be at the low of the previous candle. So this will here be the soft stop. Just do this as a dotted line, because you know soft stop is a dotted line, and the hard stop will be at the low of 2 bars back. So this will be this low here. So basically our initial stop is basically placed perfectly, and it won't move at the moment. That means our hard stop is here at the low of 2 bars back. What happens now is this great up gap. So I mean, this is the best scenario. This is what we wish for. This strong up move from here is really continuing. And also what I told you before, why it's called a wipeout signal. It's just wiping out this little resistance here. So it's just a great up move, little bit resistance is built out here at 68.52, for example, or 50. And then with 2 to 3 bars where the market just took a break, we are wiping out completely this resistance and going crazy here in the market. Because you know, this is a gap of 69, yeah, I don't know, $4 gap about, at the high even more. So this is how we can do some nice trades here. To check our stop placement, of course, if this gap happens, you should at least be break even, but you don't need break even basically. So normally you don't need break even at the wipeout, because you should be that far out of risk, or the bar by bar stop anyway is that tight to the market that the bar by bar stop is normally tighter to the market than the break even stop could be. So on the close of this candle, okay, if we don't have any targets, what we assume here, our, can I move to, okay, so our soft stop will now be here, and our initial and our hard stop will be here. Close of the next candle, so now the soft stop will be here, and this is great because now we are out of risk. Mostly with the soft stop, and our hard stop will be moved here. Let's do this here in pink, just know what I mean. Okay, so yeah, you see this here. It gets a little bit confusing here with my... I will just delete this. I should do this like this. And use some dotted line. Okay, I did not get exactly the right color here, but I think this is more obvious than what is going on. So I'm already here at this candle. So soft stop at the previous and hard stop 2 bars back. Next candle, next candle. So then this is what we are having right now here, and you see how perfectly also the stop placements would have worked out here. So this is really this is the playbook wipeout, how you want to see it. And you see this also a quite powerful setup, because when you see this, you have, I don't want to 3.5 or 4 times even the risk earned here, and this with, I don't know, a few bars. But as I told you, this is the hardcore entry. You won't always get it like this, but just this was a nice introduction, I think, to wipeout signals. Let's go through the other signals or other instruments I have here for you. So also what you will see with wipeouts very often is they just don't get filled. Okay. Also here, I mean, when we see this wipeout, it's recognized that we have these 3 big short candles here, but we would not trade this because we are not far enough away from the SMA 8. Okay, this is not what we want to see. We want to be very far away. This here, for example, would be a nice up move where we have some distance to the SMA 8. This would be enough, but not this here. This is not good. But we have one better signal here. Okay, because here what we see, we are having this strong move. We are far away here from the SMA 8, so we move far away. Here we are exactly at, but this is enough. So just to have this movement quite far away from the SMA 8. What's happening here is our entry order would be now here, and our stop basically would be here. And this is again, of course, for wipeouts, this also you need some experience to decide, should I leave the orders in or not. But as long as the candle bodies are that small, I mean, the second this is, let's say, a big candle, you have to be careful with this one. But if you say, okay, with this one, let's check if the next candle is still a narrow bar, and you see, okay, it's a narrow bar, and also this is a narrow bar. What's happening here is that the market is moving already to the SMA 8, and we have somehow even, this is not only a wipeout, but only we have done the movement at the reaction at the SMA 8, which we won't have a signal here. We won't get an 8 train signal here, but we can trade this with the wipeout entry order. We can trade it as a wipeout. But you know, with LocationPoint, you understand, you have this map of the market. So when you see this, that the narrow bars are, that there are 3 narrow bars, for example, which are very slowly coming here to the moving that towards the SMA 8, you can, you know, in your head, okay, I want to trade a wipeout, and the orders are still valid, and even here the SMA 8 is coming, which gives me extra power, and it's coming quite in a very steep down angle. And you see what's happening then. I mean, this is now not the classic playbook wipeout, but you play it as a wipeout, and so you have to wait for 1, 2, 3 to the 4th day. When this, so just as an explanation, when, for example, even on the 4th or 5th day the candles are getting bigger, okay, this is, I just mean, if the candles are somehow then looking like this, you should definitely think of deleting these orders. Also, when the SMA 8 is broken, for example, and the market do not mind if there is a SMA 8 or not, then you shouldn't wait 15 bars till the wipeout turns out, but here we have the 4th bar. This is quite okay. And yes, you're in the market here. I will do this here again with pink, and one more line for my soft stop. Which one did I take? I did not. Okay. So we are here in the market. On the close of this, we are still here. On the close, so we again have a gap and huge candles here. I mean, this is, when you see this one, you can basically think about closing your trade, because this is this huge retracement case here, candle here. But anyhow, soft stop will be then here. If you trade it like completely through, anyway, we will then put our soft stop here, hard stop here, and then we are here at this candle. When this closes, we have the hard stop basically will still be here, because the hard stop cannot be moved up, only can be moved down. Then also the hard stop will be here on the, yeah, here the market is moving down. What we have here, this is how it will look at this candle, and at this candle we will be somewhere here. Okay, no. And at this candle we will be here and here. So we are then stopped out somewhere here. And again we have, I don't know, 1, 2, 3, let's say 3 or 3.5 times the risk earned, and this with a very easy and only a few candles needed for this. And this is also what I like, because with these quick moves you're that far, your margin will be cleaned very fast, and you can enter new trades again. So the wipeout can be quite powerful. A little bit of attention of course is needed, because you trade very strong movements here, and also of course a spike, as your initial stops are that tight, a spike can easily close your order before the down move is happening. But also, just if you have a look at how powerful these bar by bar stops here work, I think this is amazing, because bar by bar most often won't work, but in this case that the wipeout is expecting a very strong move, the bar by bar stop is perfectly fitted, and a perfect fit for those wipeouts. In Facebook we also had a very nice trade here. This is what turned out to be also a very, let's say, playbook like wipeout, even if we are stopped out on up here somewhere. But if you just see this great up move here, a small red candle after this, and then even on the next candle here the market is moving up. Of course here now, if we say somewhere here, we probably, I'm not sure, maybe we are not even stopped out and can take some more earnings here. I don't want to go through each trade in detail like we did it. I did it here. I want to go through this next 10 charts with you to just talk about or show you some nice wipeouts, that you just get a little bit of an eye how a good wipeout should look like. And this here in the Facebook stock is exactly how a good wipeout should look like. We have distance from the SMA 8, a small and so a narrow bar after a strong movement, and even on the next candle a big and strong candle in the up move, in the up direction already is occurring, and the market is moving up. Let's see, I think there was one more signal in Facebook. Yeah, this one here. This is a thing when you see, I mean, these are not nice narrow bars again, because if you have a look here, your initial stop, for example, would be here, and if the market is, so this would be how your entry looks. When you see that even the market is closing below where your initial stop should be, if you see that there is, so your risk is even down, you're down one risk below your stop, this is too far. You cannot wait here and you see that the market is moving down here at the SMA 8, the candles are too big here. You should definitely delete your orders here and do not trade this wipeout. And also what you see again, this movement here of 3 candles is coming from below the SMA 8, what is not the perfect situation for a wipeout. Next one, what we have here. What we have here is, again, this is what I wanted to show you also. Here we have now 2 very big candles. This is nice. Also we have this quite nice narrow bar here, but on the next candle you see this is even this is a triple bar retracement in the short direction. This is what we definitely do not want to see. And if you have these strong short candles, don't wait and leave your entry orders here. You have to say, okay, this is enough. What I experienced in my few years of LocationPoint trading is wipeouts are very rare trades. So I very rarely find some good wipeouts. If you really see one, for example, like I showed you here in Facebook, if you see a situation really like this, smooth and strong movement, very small candle, and the next one is filled, this is what you won't find very often. When you see it, trade it, I would say. Of course, I mean, as the disclaimer says no trading recommendation here, but you know what I mean. If you see something like this, some situation like this, I definitely would trade it. But you have, of course, to be careful. It's the hardcore entry, and you know, as I told you, you can be yourself can be wiped out of the trade quite quickly. One more very nice situation here, of course. I mean, these are the trades. Here I have to say, of course, it's coming from below the SMA 8, but we have 2 bars, so this is the minimum, which is moving below the SMA 8, and this very small entry candle. And this is also what you can just try. You just put your entry order here, and your initial stop order. You can also place it if you want here at the low, because to be sure to have a spike. But basically the hardcore entry is here, and yeah, what's happening is, I mean, this is a playbook situation. What the wipeout the basic idea of a wipeout is this. What's happening here? You have a down move, this correction here below my 2 pink lines here, this break of the market, this little correction, and where the market just breathes for 1 day, and then you see how the bears are coming in again with very strong down moves. And this is of course, if you have that smooth down move where one red candle follows the other, you probably won't be stopped out until here or here, and you have a great trade. You have also 4 or 5 times the risk earned, and the next 5 trades you are, for example, you earned your losses again. So the wipeout is just, I won't trade the strategy, I won't trade only wipeouts, so I won't make wipeouts my only signal I trade in my trading life. But in the signal portfolio of LocationPoint trading, it's a nice additional participant, let's say, who gives us some possibility to be even in the fastest moves on the right side, because in these fastest moves where the SMA 8 even is too slow, from LocationPoint perspective, we won't have any possibility to trade this. There comes the wipeout, which allows us to have really the fastest moves and trade them. Okay, let's have some more trades here. Yeah, again, this is what I would trade. This, if you see this, you have some nice up move, then the small candle, and I mean, what is great also with the small candles, you can just let the market decide, am I in or not? And you are that tight with the stop that, I mean, what should happen here? And you also know you have a bar stop, and your risk is very limited. So you see here next candle, okay, this great candle, you can immediately, you will have your hard stop here. You can even, of course, do a break even stop here in this candle, in this situation, to avoid that the market, for example, is rushing down again. But you get the possibility to even trigger and trail your fast and your soft and hard stop up here after a few candles. And I mean, also if you're out here, you have 2 times the risk earned with a movement of 3 candles, for example. And why not take this? Why should you leave this money in the market? Just take out of the market what you can. Okay. This is, yeah, not so great. This one here, I would say you can trade. Strong movement here. What you have to say here, this is a little bit at the limit of the candle size. If it's nearly the size of the previous candle, it's a little bit okay, but of course you can say let's try. You're in the market, also here the market is moving up, and you will have your stop then somewhere here. Yeah, you will probably have your hard stop will be here. You're stopped out here. You have at least, for example, 1 time the risk earned, and why not? It's a win, it's not a loss. Also, if this is not the biggest trade and your biggest win ever, you just have to have this continually trading all the signals, because even this one risk, why not? I mean, if you have, I don't know, you have a bigger account, even this one risk would be a nice absolute amount of cash. And you shouldn't always, this is also what I have to learn, or I had to learn that in location point trading it's easy to have this dream of always have this 10 risk trades to earn 10 risks, because you often see some signals in history where you see, okay, when I would have traded this and this, I would have made these 10 risks. And I mean, show me a strategy where you make 10 risks very often. Of course you can have these lucky hits, but location point trading with the very tight stops, you really have the possibility to have high risk earnings. So yes, but also what I had to learn, and what one should be aware of, that we do not always look for have these 10 risk earnings. Even this 1 risk earning, it will pay for 1 negative trade you do, for example, in the future. And each buck you can earn for your trading account is nice. So just even if this doesn't look like the best trade ever, I would do it here, because you have, it's a nice setup, it's a WipeOut setup, and you can trade this here. Okay, here we have a WipeOut not so long ago. Strong movement below. Again, the candle is a little bit big, but you can say, okay, let the market decide should I do it or not. Also, it's very tight to the SMA 8, so probably I would not trade this, because we are not far away from the SMA 8 and this candle is too big. It would have turned out as a good signal, but honestly I think I would not have traded this, because it's not a very nice setup. Here we have a good one. This is the playbook WipeOut we want to see, of course. Nice one here, and look how small this candle is. I mean, this is really the best thing which can occur here for a WipeOut, because you will have let's say a huge position size which you can do. You will be in the market, and then of course you will have fun all the time up here, because I think probably you only will be stopped out somewhere up here, and this is, I don't know, yeah, here we are at 7 or 8 times the risk, probably 6, 7, 8 times the risk. And I mean, it's not usual thing that 1, 2, 3, 4, 5, 6, 7 green candles, so many green candles after each other, but it's exactly what the WipeOut is thinking, expecting and speculating on, because also here you can trail very nicely with the bar by bar stop. And this is also of course why we use the bar by bar stop. One here, one signal which wouldn't have turned out very well, I think, but we have this nice movement here. Yeah, we're in the market. We will be probably here then with the soft stop. We will be here. So at this candle here, for example, our initial stop or our hard stop will be, oh, it will be here. Here we will probably have a loss, but okay, we will take also the losses. What we have here, again, very nice, strong up down move, even here with 1, 2, 3, 4, 5, 6 down candles, a small green one, so market is taking a breath, taking a break and breathing, and place your orders. Let's say, okay, let the market decide, can we continue this move? And yes, we can continue, and then we are stopped out. Let's see, at this candle we will, yeah, somehow then probably here, this candle we will place the stop below here, and then we will stop that at this price. So again, we have, let's say, 2 times the risk earned. Had a nice trade, only a few candles, so only a few days in end of day trading. We needed to we needed our margin. We needed the margin to hold those orders, and margin will be cleared very fast. So last one, this one here, this is what we see, strong movement down, let the market decide. And what we see here is, it shouldn't be like this, that the candles are moving up here. They are small candles, but this is then away from the wipeout setup. This you cannot trade. Of course, it would be also nice in here to trail down, but also you see the market is moving here already. It's moving to the SMA 8 again, and when you see that they are increasing the price, it should only be that they are basically near or next to each other, the narrow bars. If they increase here and rise, this is rising is basically the word I was looking for. If they are rising, delete your orders, and this is it. So as I told you, you won't find a lot of wipeouts which turn out to be very to be very nice setups, because they often don't look how you want them. So also for me, the wipeouts are an additional ingredient to the complete location point style. So wipeouts are the signals I trade the least, because at first they are not occurring very often, and second, I think they do not have the same power than a location point signal, where you really have a location point line which gives you a retracement. But it's good to know also these very strong movements where you cannot do anything with location point analysis, because you don't have the SMA 8 or any other location point line which tells you where the market is probably going. For this, it's good to know how a wipeout basically works, to know that if there is a very small bar, it's very likely or often likely that there is this movement is continuing. So I would just recommend take a look at the charts again. Of course, the wipeout signal is in the location point package. One thing you have to take care here is for the wipeouts. I saw this today. The minimal quality should be 0 for the wipeouts, because quality means that there is a retracement at some location point line, and basically this doesn't make it must be 0 that it makes sense to look for wipeouts, because otherwise it wouldn't be necessary for a wipeout that there is also a retracement at the location point line, and this doesn't make sense. I think this could be a small bug. As I do not trade wipeouts very often, we didn't see this until now. I will have a look at this the next days, and if there is a small bug, of course we will fix this and set this to 0 by default. Just you can check in your Agena, check if the wipeouts here are set to 0, and so just that you see all wipeouts which are occurring. And yes, don't trade only wipeouts. I won't recommend this, but use this as an ingredient and as a as an ingredient to the complete location point style. Okay, I am exactly on time today, exactly 1 hour of webinar. The wipeouts are not the not the most complex signal, so I think it's enough for today. And I'm really looking forward for next week, because there I can teach you the first time about multi-time framing. And this is really then where it's getting interesting in location point trading for even advanced traders. So you really have to know all the signals I told you and taught you the last weeks, and this is the basis for all next weeks which are following, to really get to the next level of location point trading, because I would say the next week is one of the most important ones, because multi-time framing is just, no signal is really worth something in location point trading without multi-time framing. This is it's really where you get all the quality from your signals from, and this is also what will boost your performance, I would say, because when you really analyze more time frames, you see the big picture, you see what's happening, and you can really say and make great analysis what the market is doing, why the market is doing something, why it's stopping there, why it's moving here, and you really get much more out of the signals, and a much more understanding probably why a signal was a loser, why it didn't turn out well. And for this you just need to look at more time frames. So we'll have then these 3 charts here. In my private trading, I even do it with 4 charts to have 4 time frames always at my eye. But for this, all for this, we will talk about in detail next week. Okay, so this was it from this week. I thank you all for joining me in this part 7 here. I wish you a nice evening and see you next week.